For more on the G20 and what this meeting will mean for currencies, we're joined by Nick Bennenbroek. He's the head of currency strategy at Wells Fargo. Nick is a Bloomberg best for your accurate forecast on the currency market. So good to have you back. So this inflation story that we've been talking about, how does that play out on the currency markets?
Well, I mean, I certainly think probably it means that some of the emerging currencies keep strengthening. We've seen interest rate increases, and we might even see China just move a little bit quicker over time, though probably not right now. It's going to reduce resistance to further interest rate gains, and I do think we'll see those emerging currencies, especially Asia, move higher.
Now, speaking of China, how much pressure do you think international leaders will be putting on them to do something about the currency?
Well, that's very interesting around this G20 meeting, and you know, there's always a lot of talk and not much action, but the talk's very interesting this time, and we're seeing comments from the United States, from Brazil, and other countries, Canada as well, for example. So a lot of pressure this time around for China to move a little more quickly. It does have a history, though, of really not reacting to that pressure. So despite us getting more than usual pressure, I don't think we're going to see an immediate move from China today.
Although you've gotten the reserve requirement raised today, 10 days after the raising interest rates. Is that some sign that they're being a bit more aggressive?
I think so, and I think perhaps those domestic signs in terms of interest rate increases and in terms of reserve requirement increases are more of a clear indication that we're going to see currency moves. I don't think that we're going to see it in reaction to these international comments.
Yeah, guys, I would actually take the other side of this. I would argue that you're seeing more pressure on the United States right now versus, say, this time last year when we were talking so much about China because of what the Fed did late last year with that additional stimulus. Isn't that a fair point?
I think it is, and you know, I wouldn't disagree with you. I think there's pressure on both countries. There's a lot of pressure on China. There's certainly a lot of pressure on the United States. Brazil is an interesting case, for example, because when the Federal Reserve did the quantitative easing last year, it was primarily the criticism was at the United States. But this time around, Brazil is criticizing both the United States as well as China this time around.
But then where do the currency trends go then? I mean, are we talking about a lower dollar and higher emerging market currencies, or are we talking about an actual scenario where you actually see the dollar rally?
Well, it depends which currencies you're talking about.
Okay.
I think we're still probably seeing some strength in emerging currencies, but the risks are rising. And, you know, we're seeing in some instances, coming back to Brazil, for example, there is now fiscal tightening, so that they might not be raising rates quite as quickly. And they're perhaps a little bit more susceptible to capital flow volatility. So I think overall still stronger, but perhaps a little bit more risk for these emerging currencies.
I think the comment we've been hearing from the IMF is that the dollar's on the strong side. They keep using that language. What does that mean? I mean, if they keep saying that, how does that affect what's going on in your world?
Well, that would be consistent with the overall G20, or at least the US view, that they'd like to see some weakness in the dollar, perhaps, or at least allow the emerging currencies to be stronger. I don't necessarily think the dollar is particularly strong. If you look at it over a 20-year period, it's near historical lows. So I don't necessarily agree with the IMF at this point.
There's been a lot of talk about the yen becoming a more global currency. You know, France calling out for it to perhaps even be part of the IMF basket. Is that ever a reality?
I think it is, but it's an evolution, and we're seeing some slight moves in terms of China's increased holdings of yen and also Korean bonds, for example. Yen holdings in foreign exchange reserves are very low, and in part that's because of some of the challenges Japan faces and has very low interest rates. But I think over time we'll gradually see increased use of the yen in reserve holdings.
Currencies, or currencies that you would short now then?
Well, at this point, I would actually still short the euro. I think in terms of the next 4 weeks, the most challenging period is going to be for the euro. The European leaders have set themselves a very ambitious agenda to agree on many competitive aspects by the middle of March, and I think there's a risk that they don't get to a full agreement by the middle of March, and so there's a risk of disappointment and a risk of headlines in the meantime.
Nick, thank you. Good to see you. Nick Bennenbroek, our Bloomberg best economist from Wells Fargo.